Today, Bitcoin slumps to its lowest level since mid-November. President-elect Trump's Treasury pick reportedly wants to sell off his Bitcoin. And BlackRock's Rachel Aguirre recaps the one-year anniversary of spot Bitcoin ETFs in the United States. Welcome to CNBC's Crypto World. I'm Tanea McKeel. Crypto markets starting the week with Bitcoin extending its recent slide as investors continue dumping growth-oriented risk assets. Bitcoin was down 4% at noon Eastern. Earlier in the day, it dipped below $90,000, which was its lowest level since November 18th. Ether dropped more than 8% to just above $3,000. That was also its lowest trading day since November. And Solana fell more than 7% to $176. Taking a look at crypto-focused stocks, MicroStrategy fell 5.5%. It also said it acquired another 2,530 Bitcoin, bringing its total holdings to 450,000. Shares of Mara Holdings, another Bitcoin proxy, dropped 7.5%. Exchanges Coinbase and Robinhood lost nearly 6% and about 3% respectively. Now, reacting to recent volatility, Fundstrat's Tom Lee said he still sees Bitcoin as a big opportunity, even if it goes as low as $70,000. He told CNBC's Squawk Box this morning that he believes Bitcoin will again be one of the best performing assets of 2025.
Bitcoin is something you need to be long-term focused. I don't think anyone's going to lose money buying here at 90. If they're trying to time this, maybe they'll get lucky and it goes to 70, but to me, Bitcoin could be significantly higher this year, maybe 200, 250. So I think 90 is still a good entry point.
Okay, let's talk about the top stories. Leading stablecoin issuer Tether plans to relocate to El Salvador. The firm announced today that it acquired the proper license and that Tether and its subsidiaries are finalizing the formalities needed to make the move. The company says the move would strengthen its focus on emerging markets. The announcement comes as the stablecoin issuer faces some uncertainty around operations in the EU following the implementation of MiCA. Coinbase delisted the token for users in the region over non-compliance concerns. Here in the US, stablecoin regulation is seen as a top priority among both industry leaders and lawmakers as a more crypto-friendly Congress takes DC. Next, President-elect Trump's pick for Treasury Secretary, Scott Bessent, is reportedly divesting millions in assets to prepare to take up the position, including an investment in Bitcoin ETFs. The New York Times reports Bessent is selling several investments, including holdings in a Bitcoin ETF. Other investments mentioned include bets on China's currency and a stake in the conservative publisher All Seasons. Bessent was championed by members of the crypto industry as part of a push to fill administration positions with crypto-friendly picks by the president-elect. And finally, decentralized exchange Mango Market says it's shutting down. It announced the wind down on X Saturday morning, saying it's time for users to close their positions. This follows a September settlement between the SEC and the operators of Mango Markets, claiming Mango DAO's sale of MNGO tokens constituted sales of securities. As part of the settlement, the charged entities agreed to pay a collective $700,000 in civil penalties and destroy MNGO tokens. The crypto firm has faced other financial setbacks in the past, including an exploit in 2022, which saw a user steal more than $110 million from the platform. All right, it's been just over a year since spot Bitcoin ETFs began trading in the United States, and in that time, BlackRock has become the clear winner in a crowded field. The IBIT fund boasts roughly $52 billion under management compared to the early frontrunner, the Grayscale Bitcoin Trust, which held $19 billion as of January 10th. For our main story, I spoke with BlackRock's Rachel Aguirre, head of U.S. iShares product at BlackRock, about the one-year anniversary of the IBIT product. Well, Rachel, thank you so much for joining me on Crypto World today. 2024 really exciting, in large part because of BlackRock and its leadership in the Bitcoin ETFs in the U.S. What was your big takeaway from the year?
Well, certainly 2024's historic success was a win for IBIT, but much more importantly, 2024 was a win for investors. And why do I say that? With the launch of IBIT, we really brought together two entirely different worlds, the world of digital assets and the world of ETF investing. And in doing so, we created a remarkable bridge for investors, a bridge between the crypto ecosystem and traditional finance. And this really brought a lot of benefits to investors, specifically the introduction of exchange traded products into the crypto markets increased liquidity and market depth. It introduced more transparency for investors and increased stability in the overall crypto ecosystem. So it was absolutely a win for investors because, look, at the end of the day, what investors are after is convenient, trusted, cost-effective access to the investment opportunities that they're seeking. And so certainly IBIT was, a winner in regards to this. But 2025, we see will be even potentially another banner year for investor adoption.
Well, it certainly has had a huge role to play in terms of, let's call it legitimacy and getting the investor comfortable with what is still a new asset class. I would say that before the ETFs and IBIT launched, there was a view that allocation to Bitcoin exposure should be pretty conservative. 1 to 3% was something that got thrown around a lot. You have a view on where that is now, and also where it should be. What are your conversations with clients like? And I know that this is a range. Every investor is different, their goals are different, but what does that range look like today?
Well, as it pertains to portfolio allocation, first and foremost, investors need to understand their own risk appetite. As you mentioned, Bitcoin is an emerging asset class. Education is still needed. There are unique drivers of demand stemming from its finite supply. There are unique risk characteristics associated with it when you look at historical levels of volatility. But we also believe that there is the potential for Bitcoin to be a unique portfolio diversifier, and the investment case really does rest on widespread adoption. So for those investors who do wish to hold an allocation of Bitcoin, if we think about in the context of a traditional 60-40 portfolio, we believe that somewhere in the range of 1 to 2% represents a reasonable allocation where investors would get that exposure to the unique potential diversification benefits of Bitcoin.
Go a little bit further on diversification, if you will. The debate around Bitcoin's use case, its narrative. Is it a risk asset? Is it a store of value? This is something that investors debate again and again, and sometimes it kind of swings one way, and people know it's going to swing in the opposite direction. Where is it now, and has that conversation with your clients evolved some over the past year? Is there a little bit more consensus than there was before IBIT?
Sure, absolutely. So if we start by taking a step back, the investment case for Bitcoin itself really does rest upon the expectation of future widespread adoption of it as an alternate monetary source. And so that's really what the investment case rests upon. As I mentioned before, we believe that it has the potential to be a unique portfolio diversifier. And why do we say that? It's because its long-term fundamentals are largely distinct from those macroeconomic indicators that drive more traditional risk assets. So it's really about the fact that, there's a finite supply, there's this investment case around future widespread adoption, and that is really, very, very unique.
IBIT was one of the most successful ETF launches. And BlackRock, you launched the Bitcoin ETF with several other funds, and you were the clear winner. You are still the clear winner. Where does that put BlackRock in its crypto journey? Like we've said a couple times already, this is still a fairly new asset class for a lot of investors. And because of the big rally that we saw across 2024, but especially at the end of the year, there are a lot of investors who are really excited about what the next thing is, either out of the ETF space in crypto or from BlackRock specifically. So given the success and the progress that you've seen with IBIT, where does this put you on your crypto journey?
Sure. So, of course, we don't comment on any potential future product development per se, but what I can tell you is we are really focused on investor education. More than anything, that is what we believe is key to future adoption, is understanding and educating the widespread investor population around Bitcoin because it is an emerging asset class, because it is unique in so many different ways. And so we believe that's really key to future investor adoption is the education itself.
So with the theme of education in mind, what does a successful 2025 look like for IBIT?
Well, it's really interesting because a number of factors seem to be aligning for 2025 to have the potential to be yet another banner year for Bitcoin. And I say that because, up to this point, while there's certainly been interest across a very wide swath of investor types, retail investors, financial advisors, institutions, really the wealth advisory space, the institutional space is much earlier on its educational journey. It's really interesting if you look at the investor base of IBIT. When we originally were developing this product, I talked about it being a bridge. We had fully expected that it would be a bridge for ETF investors to access the crypto markets, and that certainly played out. What's been so surprising and perhaps less expected is that we're actually seeing that bridge go both ways. 75% of direct holders of IBIT prior to purchasing IBIT hadn't held another iShares product. So what that tells us is that these investors were likely new to ETF investing as a whole. So they were using that bridge in the other direction. And so we're incredibly excited to be able to come alongside those investors, expand their investment horizon to the more than 400 US listed ETF products that we have across every type of asset class and investment style. So when we say education, it's certainly education around the crypto market, but it's also education on the ETF market more broadly.
And final thing for me, Rachel, should we expect to see IBIT in BlackRock's model portfolios this year?
I can't comment on that, unfortunately, but again, really excited about the potential portfolio diversifier that it can be.
Okay, that's all for Crypto World today. We'll be back again tomorrow, and we'll see you then.